Traders, happy weekend. I'm Matt. He's Jacey with Empire Algorithmic Trading, and it is Vwapvision's Stock Talk weekly review here during the weekend.
Yeah, it's where we take a look at the market throughout the week and we just analyze it using just the volume weighted average price. It's the best indicator on the market and it tells you exactly what's going on. So let's get to it, Matt, shall we?
Absolutely.
All right, it's time for Stock Talk. Matt, time to take a look at some stocks. It was a hell of a day on Friday. It was actually a pretty constructive bullish day. Somewhat surprising, especially when you pay attention to the news. But we're gonna talk about that. But let's just kind of do a quick little review of the indexes and take a look at where we're at.
Sounds great.
Yeah. So the S&P 500 was up 2.1% on Friday. The Nasdaq Composite rallied up 2.6%. The small shares, Russell 2000, rallied up 2.4%, and the mid caps rallied up 2.4%. And then bonds sold off just a touch, but they're still holding right in their recent range. So all very good stuff. What I want to talk
Balls are
about
bouncing.
That's right. That's right. What I want to talk about a little bit is where we are at right now. It was is of course it's a weekly review, so we should probably take a look at a weekly chart, right? The market was down for the fourth consecutive week. However, it did rally significantly off its lows. It had a low this week of 5504 and we closed at 5638. So 130 points off of the low for the S&P 500. The Nasdaq was a little bit stronger. I had a low of 17,238, closed at 17,754, so about 500 points off. So really strong ending on Friday. The reason why that's exciting is simply because we found support at a long-term VWAP that we were looking at, and we finally got some support in the market. We haven't seen any at
Yeah.
all the last 3 weeks. And so now on the New York Stock Exchange and on the Nasdaq Composite, there was, excuse me, there was overall lower volume. That's very typical of what you see in bad markets. Higher volume on down days, lower volume on up days. So that is a little bit of a knock. However, when you look inside of the market a little bit and you look at some leading stocks, you'll see that there was higher volume on Friday than there was on Thursday. So there is some buying going on, and let's just take a look at that.
Yeah.
For example, we have Oklo Inc. It was a leader last year, flashed a sell signal up here at 45. It's currently at 27. However, it's finding some stabilization at a long-term VWAP, and it was currently up 15% on Friday on increasing
Wow.
volume over Thursday. Same thing with NuScale Power. Now, there's going to be a lot of the power stocks. We're finding some support, a lot of the energy in the power stocks, and that's good. That's what we wanted to see. We want to see the leaders, and I believe energy is going to be a leader for the future because
Yeah.
AI and all that nonsense, right? I shouldn't say nonsense, but it is what it is. So this is a potential long-term leading industry for the world, and it's nice to see some buyers coming in. So NuScale Energy finding support down around 15, a very important VWAP. It's currently at 1751. Same thing with Nano Nuclear Energy finding support at a long-term VWAP right below 25. It's currently at 30. Innodata, same thing. It had a nice breakout in February. I should say January. It rallied up very strongly, and it's been hit pretty hard with the recent sell-off. However, it is also finding support as long-term VWAP. The stock has not technically flashed an algorithm sell signal. It keeps trading off a little bit, but then buyers continue to come in. So it has rallied from 40 to 48 in the past couple of days. Credo Technology, another stock. It actually hasn't even broke a long-term support, and it's rallied from below 40 up to 49. Robinhood finding after its massive run, it's just sold off hard. I think
Yeah.
it's sold off approximately 43% since its peak. But however, when you take a look, it's just found a floor at a very long-term VWAP that we've been watching, and it traded up 8.9%. Granted, on Hood, the volume was a little bit lower, so it does diminish that a little bit. But when you look at the chart and you see that cliff and it just finds a floor right there at that long-term VWAP, that's a very good sign. That's what we want to see. Spotify is ridiculously strong. Spotify
Whoa.
closed right on the VWAP, and then in 4 sessions, it has rallied 17%. But not only that, it overtook its all-time high VWAP on Friday. That is
Well,
a
there's only one explanation for this, JC.
that's
We
because
launched
we are
on
now on
Spotify
Spot.
four
We're
days
now on
ago.
Spotify.
Yeah, four days ago we launched on Spotify. Look at
You're welcome, shareholders of Spotify.
that.
But no, that is seriously though that is ridiculously strong, and
Yeah.
so it wouldn't surprise me if we see continued buying, continued support here to see Spotify continue this run. So even though it is up 18% in 4 sessions, uh,
Wow.
that's a good sign. That's not a bad sign. Also, as well, volume has been above average for those 4 sessions, and Friday's volume was higher than Thursday's volume. So
Right.
the high volume right at the VWAP here, that kind of indicates a little bit of capitulation. So uh, very strong chart in Spotify. CrowdStrike, similar story. CrowdStrike has
Yeah.
has dropped significantly very fast. It dropped 32% in about 3 weeks,
Wow.
dropped right to a long-term VWAP, and has rallied up from a low of 308 up to 353. And is doing so on volume. It was high volume, higher volume than the sell-offs at the rally when it rallied up. I think this was, yeah, it's about a 7% rally on nice volume. And then, of course, Friday's rally occurred on higher volume. Monolithic Power, long-term leader, has found support at a really long-term VWAP. If you want to draw, when you look, basically from its high back in 2021, it's starting to find support from its volume-weighted average price. Now the stock has some work to do. It's down 40% off its high, but it's found support twice at this point. And plus, it was a nice spike in volume on Friday's rally. So we're going to continue through this, and this is going to be the same theme. New Holdings has found continuous support at a long-term VWAP, and Friday's rally of 9% occurred on higher volume. Comfort Fix, massive sell-off, and it just hit a floor right at another long-term important
Wow.
VWAP. And of course, it's slightly lower volume, but it was higher volume than Thursday. It rallied 4.2%. And now we're going now. This is the other part as I want to talk about is some of the breakouts that we've had during this red zone are holding up considerably well, all things considered. Old Republic was a breakout. It was an insurance company. It rallied 2% to retake the buy point. Palomar has actually held up quite strong. It's rallied
Wow.
3.4% on Friday on increasing volume to hit a new high after its breakout. EverQuote has held up quite considerably strong. It rallied 3.6% on Friday on increasing volume to hit a new high after its breakout. Same thing with Halozyme. It rallied on increasing volume, up 1.9% on Friday to hit a new high after its buy signal. And then Triple Flag Precious Metals. It just continues to roll. It rallied
Skyrocketing on that one.
1.1%. It's up about 8% in the 6 sessions. I'm sorry, in the 7 sessions since its breakout. TG Therapeutics, very strong. It looked like it was going to falter. A nice, successful run, up 10%. I think it might be increasing volume. I'm not quite sure. Let's take a look. On the same volume as Friday. So
Okay.
Friday for Thursday, but a nice 10% rally. T-Mobile has not followed through. It's kind of been trading down. It's still doing its two steps
Dang,
forward, 2 steps
T-Mobile.
back. Crystal Biotech is just kind of holding in there as well. It hasn't quite followed through. And then Alamos Gold did follow through
Oh,
Friday on
wow.
its breakout from last week. So
Yeah.
that's a little bit of where we're at right now. And I think it's important to talk about the difference between, and I want to stop sharing my screen so we can just have this conversation a little bit. We need to talk a little bit about what's going on and how you can navigate this And that's why we built the model, because we want the model to take all the news out, because it's very difficult to absorb what you're seeing in the market and divorce what you're seeing not only in the news but also from this administration and what's going on geopolitically globally. It's hard to look at that and say, how on earth can this market rally? Well, it does exactly that, because all of this news, all the stuff that we're seeing has already been priced into the market. That's why we're down over 10% in 3 weeks. That's why the small caps are down 20 some percent since November, right? So they're already in a bear market. We're already looking for the next potential bottom. We're already looking for support levels. And that's what we want to see. And that's what we're starting to see. So it's good. It's good that we're seeing this. However, I also want to bring up, it's important to pay attention to resistance, because resistance is really what's the key. We want to see bottoms. We want to see support, but the resistance is the important part. So I want to bring up the S&P 500 going back to the last bear market. And this is a perfect example of what we're going to be looking for. So let me get the chart up and then we will share it. So.
Well, and I think that's a thing too. Like you said, it's already baked in. You got to think about the news you consume and when you consume it. A news station, a news channel is always reporting things after the fact. It's very rare for you to find breaking in the moment. This is going on right now, happening. So a lot of these stories have been told and then regurgitated and then passed on to a partner news station and then moved. So you're getting news, 5, 6, 7, 8 days later. So it's a lot of stuff. Like you said, this is baked in. This isn't stuff that happened yesterday or 30 minutes ago. This is stuff that's been going on for a long time.
Now the governing by tweet is a problem, right?
Yeah,
Because you
yeah,
can't forecast that, and so
yeah.
so that is an issue, and that is a risk to move forward, right? The President Trump can decide to do anything he wants, and it's absolutely asinine. And how is anybody supposed to be able to forecast governing by whim? It just doesn't make a lot of sense. However, the market does climb a wall of worry. There's millions of investors making decisions every single day. There's global institutions that are modeling all this stuff out, and they have a lot of really smart people working really hard on this. So if you follow the data and they leave their footprints in the market. I mean, they just cannot hide their actions. Dark pools notwithstanding, they simply cannot hide their actions. And it shows up in the price and volume, which is exactly why we built a computer program to read the price and volume, and you utilize the volume weighted average price, because it gives you the exact picture of where the buyers and the sellers are and what the prices are in the market, and it tells you exactly who's in control. Right now, we're starting to see some buyers come in. However, sellers are still in control because we're still in a correction. We're still living below the all-time high VWAP, and I want to show you a little bit of how that plays out, particularly in the last bear market. So this is the S&P 500. We're looking at a chart of the S&P going back to 2022, January of 2022. At this point, the S&P had corrected pretty much 9%, pretty much right where we're at now. It was
Yeah.
about 10% in 16 days. Boy, that sounds exactly where we were at. There was a
No kidding.
long-term, exactly. There was a long-term VWAP where the market found a little bit of stabilization. The S&P went from 4,800 down to about 4,300, like we said, in about 16 sessions, and then it rallied hard. And so it was looking really good. However, it didn't last, simply because there was resistance up at the 4,600 level where the all-time high VWAP was. So that support didn't hold. So it dropped down to about 4,100 where there was another long-term support. Market again found support there, rallied really, really hard. However, once again, there was support, the resistance at the 4,500 level. And when you look at the chart, it started to break above that, rallied up to about 46, and then it sells off hard. And so once again, the resistance comes into play. Now that's a trap. We would have gotten in on that because it cleared the resistance. It followed through. We would have been in on this. There would have been some leading stocks breaking out. However, we would have been quickly reversed right out because the market hit a sell signal shortly after that, and then it just got worse. All support broke, It found another little bit of support level. That tried to hold. That was down around 3,900. That didn't hold. Next thing you know, we're down at 3,700. So the whole point is, even though we're seeing some life here at the support, it's the breaking of the resistance that we want to look for. And when you play that out, it found again resistance at the 4,300 level. This time it just sold off right hard. And it
Mhm.
never really found an opportunity to get us into there. So that's why, even though it rallied from 3,700 to 4,300, that's a significant move.
Yeah.
There would have been some good breakouts there, right? There would have been people saying, "Hey, this is a new bull market. Here we go." However,
Yep.
for us, we would have been paying it a little bit more cautiously. We would have been watching. There probably was not a lot of good potential breakouts here. A lot of the leaders were probably still below their VWAPs. So we're just going to wait for that resistance to clear out. And it was a good thing we did because the market continued to sell off. It ultimately took about 2 years for that market to come around, clear its all-time VWAP. And at the same time, a bunch of leading stocks, a bunch of mega caps, a bunch of growth stocks were doing the exact same thing. They were clearing their all-time high VWAPs, just as the S&P 500 and the general markets were, along with the smaller cap and the mid cap indexes. So don't get too excited. It's a very good sign that we're seeing now. Also, don't get too worried. Right. Yeah, I mean,
Right.
if your money's in a long-term 401k and I still have money in a 401k. I'm not in full panic mode. Now, granted, I did move, I am in cash, but I'm not in panic mode, right? I'm just looking for the next opportunity to put it back into play because I do believe in the United States economy. I believe in the stock market. I believe in capitalism, right? Long-term growth is going to be there. It's just the chaos and the uncertainty is causing exactly that chaos and uncertainty in the market. But as I always say, the market is forward looking. Don't look at what's happening in the news now. Look at the market. The market is already trying to price in what's going to happen next. Whether it lasts is the billion-dollar question, which is why we sit back and we wait and we let the buyers take control. Right now, we're not there. There are signs of life. There's some very important signs of life. But as we saw in the last bear market, those might not hold. So don't get too excited by Friday's 2.6% rally. Sit back, relax, wait, let the dust settle, like we like to say. And in the meantime, let the algorithm do the work for you. You don't have to think about it. You don't have to worry about it. You don't have to be what's going to happen with the economy. The market knows it. The market will figure it out. The computer program that we have built does all the math for us, and it tells us the numbers are right here. The math is here. This is what the price and volume is telling us, and that's what we do.
So just remember, guys, this is our strategy that we have designed over years and years of research from Jacey there. So if you are a hyper aggressive trader and you see some of these and want to get in, we're not telling you you can't make money today if you're going to do it. What we're saying is our model, the way that we've built this, the algorithm that we've seen with a really, really good success rate basically runs off of these principles, and that's why we are sitting, watching, waiting.
Yeah, there are a lot of setups for aggressive investors. They're sitting right at the VWAPs. There's a couple that have set significant lows. They've tested them, so you have a real clear real clear bottom, somewhat smaller risk tolerance. The challenge is the probability, right? What is the probability of that being successful? Right now, the probability is a little bit lower than what I'm accustomed to. But if you're a higher risk, more aggressive, and you're okay with a sub less than 50% chance of probability, then by all means, look for those stocks that are setting up. Look for those that are bottom. Like NNE comes to mind, Monolithic Power that set two significant lows that we just looked at come to mind. Those are trades that you can make if you're ultra aggressive. However, I like to see things settle out a little bit more. I've tried those lower moves, and I've been burned significantly enough times to learn that the probability just isn't there for me, for my risk tolerance. But there are plenty of setups there for a very active, aggressive trader. That's just our model. So we
Yep,
can go
and
over some of those. We can go over some of those in arrow review if you want, Matt, if you're kind of curious. But for the most part, overall, I just like to sit back and relax and let the market, let other people take that higher risk probability. Let the trends get established so we know, all right, now we're in an uptrend. Buyers are in control. We have a higher chance of being successful. And that's when I want to risk my hard-earned money.
Well, and I've had some people ask me, "Oh, okay, but this guy's saying this, or this guy is saying this, which is different than what you're saying." And I've had to explain to them that yes, you can look at it that way if that is your trading strategy. So remember, no matter what trading board you're on or social media, when people are yelling, nope, nope, this is what you have to do and this is how, their strategy could be drastically different than what we're doing here with our Empire Algorithmic Trading. So everybody's going to have an opinion based on how they play with their money. You can listen to what you want to, but when we are doing it, we are doing everything under the lens of our algorithmic trading, swing trading program.
That's right. And there's no opinion. It's not, I think this is going to happen. I think
Yep.
this is what's happening. This is what the math does.
Exactly.
And we have to trust it. And we do trust it, which is why, why we're doing this. Right. And so, it's worked out quite well. It has been frustrating. I'm not going to lie. It's been extremely frustrating since November, since middle of November, when the
Yep.
S&P, or I'm sorry, when the mid caps and the small caps really started selling off. It's just been spinning our wheels ever since then. However, from September to November, the model worked terrific, and so it's a great model. It works when it works when the market works, right? And that's exactly the whole point. When the market works, it works, and when it's not, that means the market's not working, which is what you see in the model. And
Yep.
so it's very interesting. I was looking at our arrows. It was kind of fun seeing the shift. We saw a lot of green arrows in early January, and then it started to flip. The green arrows started drying up, and the red arrow signals started expanding. At one point, we had zero green arrow signals and 18 red arrow signals. Right? But now it's starting to dwindle down a little bit. The selling signals obviously are starting to narrow down a little bit, and we're starting to see a little bit more green arrows show up in the algorithms readings. So and you're seeing that in the general, right? But what's interesting is the fact that we're starting to see more stocks crossing their all-time high VWAPs. Very interesting, particularly when the S&P and the general indexes are still just trying to find support. So there is starting to be some budding leadership. Whether or not that turns into a significant move higher, that's yet to be seen. But there is signs of life and there is hope. So don't pay attention to the media. Just pay attention to the market and the VWAPs and the price and the volume, and you can just close all that out, and it works out quite well.
Yep. Numbers don't lie. That's the beautiful thing.
Yep. All right, Maddie. Well, where can everybody see us?
Well, for those of you listening on Spotify, thank you so much. We really appreciate it. This is a newer platform for us to get out to. Those watching us on YouTube, we want to say thank you. And everybody, please smash that like, subscribe button so you can get the latest when we drop any of our daily videos. Also, follow us on all social medias. Facebook, Instagram, X, Blue Sky. And for more information about who we are and what we're about, visit VWAPvision.com. And to get access to those daily arrow signals that Jacey's talking about, make sure to subscribe at Patreon. That's patreon.com/Empire Algorithmic Trading. And with that being said, thank you for joining us. We're so appreciative of our community who's following us, all of you guys who are watching these videos. Tune in, interact, leave comments. We'd love to read all of those things and see if maybe one of your comments can get brought up here as a great question to have us ask JC. And yeah, we just want to say happy trading.
Well, Matt, it looks like you're ready for a party, so I hope you have a good, fun Saturday. Love the outfit. I know you mentioned a parade, so that should be fun.
Yeah.
I hope the weather isn't too terrible. It sounds a little rough, but you guys are pretty tough up there. I think you can handle it.
If there's anything we are in the Midwest, it's hardy, that's for sure.
That's right. All right, Matt. Well, we'll talk to you a little bit on Monday. Again, I'm gonna take tomorrow and go up to the Players Championship and watch some of the best players in the world play some really good golf. So I'm really excited about that. In the meantime, as always, happy trading, my friend.
Happy trading, Jay-Z.
All right, we'll talk to you later.